Hello folks, I'm L.A. Little and this is your weekly TA Wrap, where we talk about these markets and we look at them from a neoclassical perspective, each time asking ourselves what happened last week and what does it tell us about the coming one. I do this show once a week every Sunday night, live at 9 o'clock Eastern Time here from the base of the Rocky Mountains. So folks, we had a down week, finally. I mean, it's been ages, but finally had a down week. Finally got some downside action on these markets. If you look at the kind of numbers here, bad numbers, right? Lower, moving lower, and now you actually got some pretty negative numbers on the Russell, on the year. The Dow is negative, and you're still positive on the other two, but certainly a pretty good spill last week. Took a little bit of a sell out of the wind out of the sails there on these markets. Now, you know, 1 week doesn't make a trend, 1 week doesn't necessarily make a top, but there's definitely some concern that there may be a top, and naturally, as soon as you get this kind of a spill, we're looking at the daily right now on the S&P 500. As soon as you get this kind of a spill, the first thing you do is you hear all this talk about how this is the crash, this is what everybody's been, saying is going to happen, so forth and so on. Before I go into anything else, I want to give some perspective. Here's your weekly. All right, to even break a trend on the weekly, you got to get below 1900. That's just to break the trend. 1868 is the number. That's a long way down. And if you want to look at it on a monthly, I mean, you're not even close. I mean, this one's about to print next month as a swing point low. That's the February bar this year. That low is 1737. So in other words, you're going to have to drop 200 points from here, almost 190, to break that low. And that is the change trend on the long-term time frame. Until then, it's bullish. Right? You've got to break that. Before you break that, you got to break the intermediate term. That's another, 1868. We're trading at 1925, so that's another, what is that, 3250, about 55 points. We just went down 55 points, and everybody thinks it's like the end of the world. That's a big drop. So to get to where we got to go to actually make this thing break down is a long way. So you need to put it in perspective. These folks that start calling out as soon as there's some sort of a decline that we're going to see a crash, that was the top, so forth and so on, it's a bunch of nonsense. You don't know that until after the fact. And if we get some more signals that tell us the intermediate term trends are in danger, in jeopardy, well, then we can get a little bit more safe. But at the beginning, you've just got a change of trend on the short-term time frame. And if we go and draw these in, right, we had kind of two areas here. It's going into the bottom of the lowered zone. Right now it's holding that, and maybe it is going to break down. Maybe it's going to go all the way to the bottom of the third zone on the way down, in terms of equidistant zones. But right now, it's been a fast, vicious decline that usually sets up some sort of a short-term bounce. And it's the bounce where you learn what the market wants to do. And right now, we're not even close to that. Until we get the bounce, we don't even know what the market wants to do. What's the first bounce? Well, this was the last swing point low broken. The retest, regenerate zone is right there. So what you're going to want to do is you're going to want to watch and see how, if it comes back immediately, how it tries to attack that top. That top on the S&Ps, 1943.35. We're sitting at 1925, so you got to go up about, 18 points or so? 18 points to attack it. 18 points on a given day is a heck of a move. So 18 points just to get back to see if this wants to break down lower. If it does, then we can start thinking more seriously about a change of trend potentially on the intermediate term time frame, and I'm drawing in what would be a hypothetical ABCD down target. And as you can see, that gets you to about 1882. And what was the number over here? It was 18. Go back and get it. 1868. So 1868, the number. This would get you to 1882. We still wouldn't even get to the ABCD structure. Wouldn't get us to a break of the intermediate term time frame. That low is this low, 1862. It's the May 15th low. So that would just get us into the top of that low's high. All right, get us into the high of that low bar. So that's the S&P. Yes, we've got some damage. Yes, for now on the short-term time frame, we definitely have a change of trend. I mean, we just broke 4 swing point lows in 2 days, right? And as I talked about in a video, you've taken away basically 2 months of gains. And if we travel on down a little bit farther here, we're going to take away a full 2 months of gains. That puts a lot of people underwater. What you're going to see if this market can't bounce, in other words, if you don't get, one of those phenomenal V-shaped reversals like we've seen in the past, if you don't get that, and instead you get some sort of a smaller bounce, maybe you even get up to here and you fell, right? That's a change of trend. In other words, we're sideways instead of, straight up. Right now, just went to bearish on the breaks, went bearish here, went bearish there. That's a change of trend. Now the question is it going to be a range trade, or are we going to continue lower? In other words, do we have some sort of a range trade here, maybe even back into the swing point high? As a matter of fact, if it gets this low, that's actually just a retest, regenerate off the prior high, and it comes way after more than 6 bars. So what does that usually do? That usually sets up a fairly good buy signal, a fairly high probability buy signal. That top is 1902. So what you can see is the 1900 level, especially if this just comes straight down. That would be an ideal buy spot for some sort of a decent bounce. Now if it bounces first and then comes into that zone, it makes it a little bit harder, but still the probabilities and the odds are pretty good on the first retest of a retest, regenerate bullish here, that they're probably going to buy it, trade it sideways at worst. S&Ps, that's what they look like. Now, if you look at, and the S&Ps are, good proxy for the Dow too, it looks about the same. If you look on the opposite spectrum, at a weakest one, that's been the Russell. Now the Russell on Friday actually finished up all 3 ABCD structures that were in place. You had one here, finished it. You had another one nested, finished that one. You had another one nested, finished that one as well. So all of the structures to the downside have finished off. The Russell has done what it wanted to do to the downside. More than likely it's going to try to get a bounce and probably get it right away. If it doesn't bounce, more than likely it will trade sideways. It's probably not going to go too much lower immediately. It's going to build something out if in fact it's going to go lower without a bounce. And that's the Russell. Now the low bar here is 1082. That also, if you go to the Russell's weekly, that also are these lows, 1082.53. That on the weekly becomes a serious problem if it starts to break these, because here you've got 3 of them lined up almost exactly at the same price points. A break below that would be a major break in my opinion, and that would be the best signal that something deeper is happening, something larger is happening on these indexes. So the Russell, you always look at the weakest one first and see if it can actually break down. Because what happens in these markets, and what I've talked about before with members, and I'm sure I've mentioned it here as well, if I pop over to the current trends on this market and pull this down, and let me actually get it up here. So current trends, am I logged in? I need to log in first. So if I log in here and I come into the current trends, what you're going to see is that, and what I've talked about this, I know I've talked about this before, is that what really happens is short-term trends, they affect intermediate-term trends, which affect long-term trends. That's a bottoms-up approach. Wrote an article about this just recently. When you start to see breakdowns, right, in this case we've been bullish, when you start to see breakdowns in the sectors, and we did have breakdowns in these sectors, the industrials, the energy, I think that was the main two that started. Eventually the IWM itself, these started to break down. And once you get two or three, more than likely you're going to see more than two or three. You're going to see all of them, or almost all of them. And that's exactly what happened last week. 2 weeks ago we started to see some wear and tear here. I pointed it out. Now you've got breakdowns, change of trend in almost everything out here. The only one that isn't is healthcare. It's the only one still bullish, and it's on the verge of breaking. So you get all of these change, and all of these changed as well. And what does that do? Well, these are still bullish, but now you're starting to see trend transitions on the intermediate term time frames. And as you start to see 2, 3 of these start to change, eventually that usually leads to all of them changing. Going sideways just simply says I'm not going up anymore. It doesn't mean I'm bearish, right? It just means I don't know if I'm bearish or bullish going forward, but I'm certainly not straight up anymore, when we transition from bullish down to sideways. And so it's a transition, it's potentially a halfway point between bullish and bearish. You can kind of think of it that way. Doesn't mean you're going to go bearish, but it's certainly kind of a warning sign that you could. If enough of these start to change, and there's 2 or 3 of them on the verge now, then you're going to see these change. And when these change, now you potentially have the problems out here. Now I know I've talked about previously the fact that the MTTFs, the mean time to failures, are extremely stretched. On the Russell, 85%. On the intermediate term time frame, bullish. That's not a good thing. And if we look at it on the S&P 500, it's even worse, because here you're stretched to 95 and 89. These are extremely stretched numbers. That usually argues in the possibility that you're going to get a transition reasonably soon. 95.7, I haven't seen it this high in ages. I mean, I have to go way back in my data to see something like this, back in the 2000 market, the 1999 run-up. That's the last time these numbers printed this way. That tells you just how stretched this market is to the upside. That tells you how much danger there is that this market is going to transition. And again, to transition, you got to break a swing point low on the way down. Is it possible? Yes. Is it going to take a little while? Yes. More than likely. It's probably not going to head straight back down there and break it. It's, the odds just aren't with that bet. If you get a push back up, it fails, then you have a better opportunity. And so one who has money in this market wants to take that push back up and reduce their risk a little bit. That's the way you trade the market. You don't just assume it's going to break down, but you reduce your risk when there's the possibility. And that possibility is no longer just possible, but more probable. And that's the scenario you're starting to face, and that's what you should be doing or thinking with respect to the portfolio. So that, in summation, is where these markets are. That's kind of where we're sitting. That's kind of what could happen, possibly will happen. That's the sort of thing that the risk is starting to increase. It's not horribly risky at this point, but you're starting to see the risk level increase, that we potentially have a top in. We certainly have a top in for now on the short-term time frame. Question is will it spread to here? It will take some time, but you don't have to wait for it to break this. You can take some precautions when it bounces and still be, like 1.5% down on the index, not 5. or 10 or whatever it takes, right? I mean, what is that low? 1868, the top was 1991, so that's 100 points. So that's 5%, right? 5% correction. Do you want to wait for 5% to decide? It depends. It depends on what you're trying to do. I personally don't wait quite that long, but I managed my portfolio a little bit closer than some people. Some people say it's noise. Just wait. Some people say if you don't get a 10% correction, it doesn't mean anything. In other words, you don't want to worry about anything less than 10%. It's noise. And they may be right. Certainly they've been right the last few years because this thing hasn't corrected at all for 10%. And it's been right to stay with it the whole time. Looking at the overseas markets, there also argues that this is going to take a while to develop if in fact we're going to see this thing break down. And what I mean by that is if we take a look at Europe, Europe's already breaking down. Europe is bearish on the intermediate term time frames. That's very different than us where we're still bullish. If you look at Germany, same situation, bearish here and sideways now on the intermediate term time frame. The FTSE's a little bit stronger. They've certainly, because they're not part of the euro, they've had the ability to cushion their shock. They just went bearish here on the short term, but they've done that before. They are sideways at this point on the intermediate term time frame. So this one tugging to the downside. But then if you walk over and you take a look at Asian markets, these guys just broke out. Just went to highs here, trying to get to the highs. That's the Shanghai. If you look at the Hong Kong itself, over the highs, bullish here, over the highs. Very different story. Very strong, and that's pretty much throughout Asia, whether you look at Korea, Indonesia, the topics in Japan, all of them. So a very different story in Asia. So you got very strong Asia, you got very weak Europe, you got us in the middle again. That argues for a mixed bag, going to keep things mixed up. All right, let's look a little bit deeper underneath the covers for those that you want a little bit more detail. And let's look at some of the major sectors here. And what I want to point out here is that for the most part, most of these are pressing lower and look to try to go lower. If we look at the intermediate term time frames, it's not so bad. Here's the IYT. Now we've got 2 or 3 that are potentially going to try to break. This one has huge volume on that low, so it's going to be hard to break it. 142.90, you're trading at 145. So another 3 points down, you're struggling and going to attempt to break that support zone and what is a swing point low that would transition trend. Remember, we have 2 that have already transitioned. XLE is one of them. Here's the lows broken on the daily, and there's the low just broke on the weekly. So this bar breaks, you get a transition, you go to sideways. So that's one of the 2. The other one is the XLP. The XLP is interesting because the XLP itself, this one was giving us some early warning signals if something was really wrong. As far back, if I go back to the daily here, remember we had breakouts up here that wouldn't hold, and then we came back and we did a retest, regenerate, and this is when the markets were still strong, and this one could not regenerate. That was our heads up that we'd gone into a sideways market. Then when it breaks the swing point lows, right, then you know something's definitely wrong, and look how it just blows them all out. Left a little bit more volume, so it may test a little bit lower come Monday, but this one definitely has changed transitioned back down. This is the first time back into that swing point high. What does that mean? That means that more than likely this thing is going to bounce out of here. Even though it's hitting it with a lot more volume, odds are this thing will bounce, probably bounces back up into here somewhere, and then you've got an ABCD structure to try to break it out on the downside. And this one does look weak enough to actually try to break it out once it bounces. But that's the sort of scenario you're starting to see set up. That's the sort of scenario that you want to watch the weak ones to see how they behave, because if they regenerate in a bearish fashion, that's more indication that the general markets are going to try to transition as well on these weekly time frames, and that is where danger can rise exponentially. XLF breaks swing points, 4 of them, 2 big days down, breaks 4 swing points. And you saw this across the multiple sectors. Here's the XLK, which has been the strongest one. Look at the volume escalation as this one blows out everything. Only one still holding up, XLV I was talking about, but it's right in at the area here to try to break out its own left volume as it came down. I suspect that one is going to transition as well. And going back, the only one that looks like it really wants to bounce from here is the SOX. Got up underneath, back over after a fairly extended move. That's a 2-bar reversal. I suspect that one's going to try to bounce tomorrow. Ox markets. We saw a little bit of bounce in the gold markets, but really couldn't get anything going. They're holding up here. You know, they're trading off this big range, and right now it's just a range. I'm looking at the dailies. You know, you trade above the range. Now you're trying to trade below the range. You're holding right at it. Kind of a key area coming up here. If you look at it on the weekly, it still could be a nice ABCD structure to the upside. If you look at the volume tails, they look positive. So far, this still looks like a positive chart that wants to try to work higher. That's true here. It's true of silver as well. If I look over at the bond market, on the bond market, we've got a big push up, comes down hard. Now we get a push back the other way, less volume. This is going to continue to gyrate. Looking at it on the weekly, same sort of thing. Volume push up and down. This looks like a sideways market. Don't know where it's going to go. Where I do know something's going is the dollar, and the dollar has been pushing up, tries to come back down, got underneath this big bar with the volume, holds it. Looking at it on the weekly, it's over the swing point high, has transitioned, shooting for the higher highs, and it's got some decent volume starting to pick up in it. Has a little ABCD structure that gets it up there, so a stronger dollar makes it a little bit harder on gold and the metals and commodities, but you know what? They're holding up pretty well with this thing stretching higher. As it gets up towards these highs to where this ABCD structure takes it, that's probably where it's going to take a rest, and then you may see those other markets that are just holding begin to take off and actually sprout some wings and fly. Bond market, we had saw that this market was blowing out the lows. In fact, it did blow out the lows, really got a steep bounce or a steep sell-off. Volume expands, but what's it coming into? It's coming into some big volume over here, right, on these bars. And I actually had a question on this, so let me try to take that while I'm here. So I'm interested in junk bond ETF. Could you please talk about it in your weekly TA wrap? It seems to me that it will finish an ABCD move down and be short-term oversold. Am I right? Thanks in advance. Wish you a great weekend. So, yes, it is. It's moved down. It's moved down fast. The ABCD structure, I assume you're talking about, was probably from this top. And actually it had 2, and it's more than finished it, right? Because I do these ABCD structures a little differently than most people. For one, I wouldn't count this as an ABCD structure. That's not the way I look at it. I look at it in a more granular fashion. I've got an A point here, and I'm looking for the first opportunity where you get 2 bars and a rise, these two. So this high is higher than that high, the low is higher than that low, and it comes after some low. When you get that, that becomes the ABCD structure. That one got it down. That was here. Now the next one is from there down, back up, and it's more than finished that one, way down below it. Yeah, very sold off. Volume expansion. What you'd like to see is a test of that low again, right, to get the bounce trade on the upside. Let's see what it's coming into. So you're doing 42.7 into 63, and that one's 58. The high of that low is 39.79. We got to 30. We got to 40. You really want to pick this up right here, right? And you may still get that. in that zone. You want to see it test here, and you're using this high of the low bar as your stop out, right? Stop out below it. That would give you the best opportunity. Working at bounce 2, well, you just look back for the last low that was broken. That's the retest regen. So you can see why you want it down here, not where it is, because it may not get any higher than there. And you're not going to have good risk reward unless you get it low enough. So the trade is a test of that low. If you go back to the daily, a test of this low on the daily should give you a decent bounce. On the daily, it could get back into this low 41, going to the weekly. The low that was broken here is this one. The top of that is 40.74. So somewhere between 40.75 and 41 is probably the bounce. You've got to use that to figure out your risk reward, which means you need to catch it low enough to make it make sense. Okay, let me see here. I'm running out of time. My expectation, you just had a vicious sell-off. We haven't seen one of these in ages. Can we get some more downside? Sure. But as we've already seen, more than likely you're going to see this market get a bounce. The question will be is how does that bounce play out? You know, is it a V-shaped reversal or is it something less than that? If it's something less than that, then you're going to set up ABCD structures to the downside, bearish ones, to try to take you down towards those swing points, lows on the intermediate term time frame. So a bounce out of here, the test is how does it bounce? Does it get back over this? If it does, you got some sort of range trade. It's going to trade longer up here. If it fails right here, then you got a vicious ABCD structure that can take you down into this bar and set up a, you know, a fairly decent correction. So that's the test. And then if it sets up this way, let me just re-emphasize this one more time. If it sets up this way, that's going to take it down into this and towards those intermediate term lows. If it gets the higher bounce, it comes all the way back up to here. It's a very different story, right? That says sideways, some sort of sideways range. Maybe the range expands down into here. And then that maybe is where this swing point high, the retest regen, takes place. So you can see the two scenarios. You can see how they're set up. The real question is which one plays out. I do suspect you're going to see some more selling pressure as this goes back up, and we're going to range trade for a while. Weekly, not so much here. The weekly, you want to look at the Russell. If in fact if the bounce isn't much, you're going to look at the Russell to see if it can break out the lows, because if it breaks out the lows, most other indexes are probably going to follow over time. All right, that's it for the weekly wrap. I thank you for joining me. I appreciate it. Have yourself a great night. Take care, and I'll see you next time. Good night, folks.